Maverick traders, welcome out to your market roundup for February 14th. Happy Valentine's Day. Let's get to it. So the markets today really took a breather, which is interesting because the CPI reports have fueled volatility. I think in the past 6 to 8 meetings, you've had about 1.5% type of moves up or down. Today was certainly not that way. Dow and S&P slightly negative, NASDAQ slightly positive, but basically flat. Oil was the bigger mover, down 1.5%. Advancers versus decliners tells the story, about half and half. We're still in a bullish market trend in the short term, about 7 out of 10 stocks trending higher. Today, all eyes focused on inflation, and it came in at 6.4% annually. That's higher than was expected. Out of the 15 or so major banks, only 3 had a 6.4% expectation, and nobody had anything higher than that. So certainly, as far as expected numbers, it came in higher than expected, and the breakdown was really interesting. Look at egg prices up 70%. We're seeing deflation and lower prices in televisions and autos. So the breakdown was kind of informative as far as where inflation is and where prices are coming off. As we look at the S&P, I mentioned this last week, I really consider myself more neutral at this point. I got neutral a few Thursdays ago at what I felt like was kind of a blow off top, and that's certainly how it's acted. It's acted exhausted, and we just ran too far too fast, and now there's been some profit taking, but let's give credit where credit is due. You are consolidating at the moment, and you're not giving a lot of ground, and today's a prime example of if you had told me that inflation number beforehand, I'd have said, okay, markets are going to have kind of a rough day. We'll probably be down 1.5%, on that type of number. It wasn't catastrophic, but certainly I would think some selling, and we were basically flat, almost unchanged on the day. That tells you good price action on something that would have, could have, should have kind of knocked the market down. So you got to give credit where credit's due. Again, the NASDAQ had that blow off top. We're certainly consolidating and pulling back. Now, I'm ultimately of the mind frame that we are going to test lower prices later this year, but we've got some choppy trading in the near term, and that's what I would kind of take this as, is people just too pessimistic, too negative. We're chopping around at this point, chewing people up and spitting them out with just the back and forth. So semiconductors strong, definitely more green there. Healthcare more in the red, and that's certainly been a common theme. And then defensive stocks. This is an area of the market that's defensive and expensive. When you think about where people were hiding out, market expectations were for a recession, and the playbook is you go defensive and you get into staples and things like that. Well, the odds of a recession have certainly come down, and these are very, very expensive. And so people are rotating out of them. You've seen kind of a dash for some of the trash stuff and such. That's just been an expensive area of the market. So weekly and monthly outlook, right now we're kind of in this upward push, and I would be a little bit more bullish just from the standpoint of, hey, it traded pretty well. Tomorrow is where maybe there's a delayed reaction. People really look at the data and so on, and maybe they try to hit the market tomorrow, but pretty good price action today. Let's look at a few trade ideas on the bull, the neutral, and the bearish side. So starting on the bullish side, we highlighted Oxy last week, and it's done nothing but gone up since. And notice the quantity, the number of times you've hit this lower range and bounced, and like clockwork, it's doing it again. Now, you do have resistance up here, and what's interesting is if you were to back this chart out multiple years, you'd see that over the past decade plus, it has stalled at that level over and over again. I think we're going to make a run towards it, and my thought would be probably up and through it in the not too distant future. I would certainly put myself on more of the bull camp on that. Target, notice the resistance, but here's what's kind of interesting. Each time it hit that resistance, it was repelled sharply, it gapped down violently, and this time it quietly pulled back. And what's very bullish is when you're hitting resistance and then you start to make higher lows. the ascending triangle type of event. I think that's what's happening here. Notice we're just not seeing the same velocity and resistance and being pushed away from this level. I mentioned this one last week that I was really looking at target. I have not bit yet, but I suspect I may do so tomorrow. So I haven't actually pulled the trigger just yet. And post CPI and the good price action there, I think I want to look at something like a target. And then UPS, which I actually do have a position in, entered prior to the CPI on this pullback. Again, I think it's just kind of a buy the dip candidate. We should go make a run back up there towards above 190, and maybe I'll take some off as we get towards that resistance, or maybe even on the breakout. But ultimately, buy the dip. This is something that has been working its way higher and kind of should have that same upward price action as like a target. Very similar type of chart setups and expectations there. On the neutral side, I'm going to highlight something like Tesla, which had a very volatile day today. And even though it wasn't at the new high, I think it's a sign of exhaustion, that this thing is just running all over the place. Now, a neutral idea for Tesla is like, hey, it's going to stay between these markers. An expectation of neutrality is more one of volatility, and it's the hardest thing to trade in the options market. But I think this is a time where Tesla should start to, it won't go quiet into the night, it won't just go sideways, but it should start to have lesser moves than what it has been experiencing, starting to calm, see some consolidation patterns and such. So I think it's a candidate, but it's a high risk candidate. On the bearish side, we've got Northrop Grumman, NOC. Here we're keeping this gap open. We have not filled the gap. And if it fails right here, it should trade back down at least towards the middle of the range, if not lower. So that's kind of an interesting little range trade. Newmont Mining, I highlighted this one last week. You had the initial break, you had the bounce back, and I guess I joked that maybe this was a revenge trade because I had been stopped out just prior to the big drop. I guess not, because it is working its way lower and was in fact a good entry point. And then last but not least, Merck. Healthcare has been underperforming. You had a bearish engulfing formation right at the 50, and notice the slope. Notice the 20 crossed under the 50. Notice the rolling over price action. This doesn't have to go lower, but it's a pretty good risk to reward entry. If it breaks higher tomorrow, it's just a no touch. If it starts to roll over, it's a pretty good setup. Markets have fulfilled that ABC correction, that bullish move that we talked about for some time. I consider myself more neutral at these levels. Retail sales on Wednesday, PPI comes out on Thursday, and we're still in earnings season. AIG and Applied Materials, Cisco, Deere, Datadog, and Shopify to finish off the week. Hope you enjoyed this market roundup. Have a great rest of your day, and we'll see you all next time. Goodbye, everyone.